Hello there. This is another recording and another teaching on double entry for beginners, one out of the few series that we are, giving out on double entry for beginners, hopefully. Trying to give you an insight, the logic behind trying to understand the double entry principle, which account will I debit and which account will I credit. Of course, we know the double entry principle implies to me for every debit entry, there must be a corresponding credit entry, which then also leads me to the acronym DEAD-CLICK, which we try to use to learn the double entry. That is, which account again will be debited, which account will I credit. The DEAD-CLICK means debit, expenses, assets, drawing, credit, liabilities, income, and capital. When any of these are increasing, you will debit. When any of these are increasing, you will credit. So if your capital is increasing, you will credit. If your asset is increasing, you will debit. We're going to look at some scenarios. The first one says to us, if I go and buy products of £150, which I will resell, and I have not paid for these products yet. That is credit purchase. That means you are owing somebody. In such situation, I have incurred an expense and I have also established a creditor because I have not paid. So you go and buy something, you've incurred costs, you've incurred expense. Your expense is increasing. Which expense? In this case, I bought products that I'm going to resell, so my purchases. That is to say, the materials that you're using to, make your income, to generate income to the business, is increasing. I've just bought some more items. Cost has increased, expense has increased, and I've not yet paid. So you are owing. Your creditors will be affected. Another name for creditors will be your purchase ledger control account. Another name yet for that will be your trade payables. I am owing, or the business is owing. So you have creditors that are increasing. If I bought some things from you yesterday for £100, I've not yet paid you. I'm owing you £100. I come again today, I buy another £100 from you. My expense is increasing. And the amount I'm owing you is also increasing. Now I owe you £200. The amount I'm owing is increasing. It says to me, invariably, my costing is increasing as I am incurring additional costs, and my creditors, which is your liability, are also increasing. So I have established the fact that the purchases account and creditors is affected. And of course, I will debit purchases with £150 and I will credit creditors with £150 as well. Just a reminder, your DEAD-CLICK. I then say, if I go to buy products for £150, which I resell, and I paid for these products immediately, that is a cash purchase. In this situation, I have incurred an expense, and in this case as well, my cash has gone down because I've paid. Invariably, my cost increases and my money decreases. So you will find that your costs, in this case, what cost? Purchases, is increasing. You're under debt. The debt is an expense. The expense is increasing. I will debit the expense as it is increasing, and I will credit the cash. The cash is under debt. It's an asset to me. If my asset is increasing, I will debit. If it is reducing, I will credit. And in this case, it is reducing. So I will credit my cash with £150 both ways. Now let's introduce VAT. And we know that VAT in the UK is VAT that is paid to the government and it is tax on commodities that is charged by the government. If you're a VAT registered business, you need to charge VAT on your sales. So you sell an item maybe for £100, you need to add VAT to that £100, and then the gross is what you will expect your customer to pay you. VAT on purchases is an asset because it can be claimed back by a VAT registered business. This means that a VAT registered business must charge VAT on its sales, and this is payable to the government. And the business can reduce this liability by any VAT it may have paid. That is the VAT on purchases. VAT is currently charged at 20% standardly, and we've kept it as a very, very basic, simple statement. That is to say, VAT is a lot more complex than this. What we are working with, double entry for beginners. So the very basic level of VAT is literally a case where you are working with the standard VAT scheme, and that implies that if your company is VAT registered, you charge VAT on all your sales. That will be a liability in your company's hands, and you will also pay VAT. That will be VAT on purchases, and you can claim that back. With the same scenario, we want to now work on the exercise as though there is VAT charged on that transaction. If I go and buy products for £150 net, meaning the net amount, and I have not paid for these products yet, that is a credit purchase. In this situation, I've incurred an expense. I will have a VAT asset to claim back on this purchase. And I have also established a creditor because I have not paid. Invariably, my cost is increasing. My asset is also increasing. Which asset? VAT, your asset. VAT on purchases, which you will claim back. And my creditors, which is a liability, is also increasing. So that means that the cost, which is under debt expenses, is increasing. You will debit your purchases. You have VAT on purchases, which is an asset in your hands. It's also under debt and it is increasing. You will debit your asset. Which asset? VAT. And you will also have your creditors. Your creditors, you will credit that because your liability is increasing and it's under click. Credit, liabilities, income, capital. In this case, liabilities is increasing. I will credit liabilities. And the purchases will be with the net amount of £150. The VAT, which is 20% of £150, which gives me £30, is a debit into VAT account. And then we credit creditors £180 with the total amount that is owed, and that will be credited to creditors account. In this case, I have simply bought products worth £150 and the company will charge me VAT for 20%, which amounts to £30. I don't have a choice but to pay the full amount of £180, and then I can claim back the VAT which I have paid by completing a VAT return to the government if I am VAT registered. Hence, the VAT on purchases is an asset if the business is VAT registered. Again, remember, we've kept this to the very simple, basic position where you have VAT on purchases and VAT on sales. Do bear in mind, VAT is a lot more complex than that. Okay, so this is just the bare basic level for beginners to just give you a little taste of the VAT that is charged on your purchase. The same thing will apply with VAT charged on a sale, and you'll calculate it exactly in the same way. I hope this has been useful. The rest of it is keep learning, keep studying. We have a series of videos on the double entry. For beginners, please do well to listen to the recordings, listen to the teachings, keep learning, like our pages, follow us on social media, and there are lots of teaching, learning, and knowledge to keep acquiring. We try to help you with that as much as we can, and I hope it's been useful. Please feel free to like our page, feel free to subscribe and please feel free to follow us. Thank you and see you. Adios.